Good morning, teacher and class. We are going to talk about the analysis and result of the decision of the Zeta company in the period from 2020 to 2024 are present. Next. The company is headquartered in India and competing in two markets which are India and Southeast Asia. In addition, it has two big producer factories which have high production capacity but are not specialized. Obtaining a factory occupancy rate of 90.9% of the three product line that the company has small applicants is the star product. The company's market share is 21%. Industrial technology is at level 1 as is the level of innovation. Organizational skills are at level 3.8 and brand equity is 46. Next. In this presentation, can see the company's strategic objective, starting with the first, which is to achieve a market share greater than 20% in all market segments year after year. The second is to achieve a year-over-year growth in sales revenue greater than 10%. The third objective is to achieve net margin greater than 5 million year after year. The fourth objective is to decrease the average unit cost 5% each year. The fifth objective is to increase the brand value to a scale of 70 of in the year 2024 for a greater presence in new market. Finally, the sixth strategic objective is to reach a scale level 5 in industrial technology to enter markets that demand high level of technology. Next.
In the first decision, it has entered the markets of China due to the growth of the market and the acquisition of products at a low price. It has also entered the market of Africa because it bought products at low price and without so many demands on quality from the population. It was necessary to invest in the innovation of the product, the technology of the factories, and the capacity of the organization, because they present a very low investment, suggesting why they had low levels in these factors. In the second decisions, the market of Japan and Korea and the USA and Canada were entered because these markets were constantly growing and it was possibility to participate with higher prices compared to the rest of the markets. In the third decision, Russia and Middle Asia and European Union markets have been entered due to the amount of population at the increments production capacity. The company cost and expenses were managed more effectively by ability analyze the market growth of the country in which he is participate. In the fourth decision, it has been required not to the investment so much money in product innovation, factory technology, and organizational capacity, because it was not wanted to continue increased expenses and sales continue to increase. Next. In this map, you can see the markets that have been entered from the years 2020 to the year 2024, and the three most important markets for the company are India, Japan, Korea, and Southeast Asia.
Okay. Next, I will present the analysis of the budget via real analysis, evolution of Pisconte. As shown in the graph, the renewable trust has maintained sustained growth. However, in the years 2021 and 2024, the adjusted budget could not be reached or exceeded because in the first stage of the marketing, but the budget in the personal expenses were distributed inefficiently. Regarding the year 2024, to renews and crash compared to the previous year, they did not exceed the adjusted budget, reaching only coverage 19.7% due to the entry of new company in the company's market. However, in the end, there was positive cumulative gap and a real growth rate of 14%. In cost evolution, regarding costs, they have has a slightly increasing trend, especially in the years 2022 and year 2023, due to the fact that two new factories were implemented in order in the cross production capacity, and Achiever have leave of silence, following the company cost leadership strategy. The average annual cost was reduced and sent in a negative real growth rate of 6%. Next, please. In evolution of term expenses, expenses have decreased expense for the years 2022 were expenses increased and the highest price was also experienced because in the years the new factory was implemented and two new markets were entered. So it was necessary to expense plus and staff training expenses, market expenses, research, and deployment expenses. Net profit evolution, net income droppings and the year 2021 as marketing, research and deployment, and staff training expenses increased by 50%. However, the expenses did not affect the benefit of higher sales in the next market, nor did capture a great market shares in the new markets. Therefore, we experienced much more than necessary and not achieved a higher level of sales. The new profitability decreased by percent from the previous years. However, with each opposite accumulation gap in the actual group of 7% were obtained the current year. Next.
Okay, next we will observe the evolution of the strategy indicators, starting with the first objective, which is to achieve a market share greater than 20% in the all market segment year after year. And these objectives have been maintained in force in all periods since from 2020 to 2024, despite the fact that new competitors were entering the markets in which the company participates. In the second objective, as you can see, this objective has been achieved until the year 2023, but in the last periods, it has not been possible to meet the objectives to the fact that there has been revenue growth of 1.4%. The next, please. Okay, in the third objective, to reach net margins greater than 5 million year after year. These objectives have been maintained in the last three periods, but in the year 2021, the goal hasn't been achieved due to the fact that the costs and expenses were very high, considerable, reducing the net profit. And the core objective of reducing the average cost by 5% each year hasn't been achieved in the period 2021 due to the fact that the maximum of the production capacity has been used, increases expenses. So in the following periods, if the reduction of costs has been satisfactorily achieved through the fact that the necessary quantity of products has been optimized and manufactured to sell to the market. And next, please. Okay, in the fact, fifth objective, the strategic goal has been met because the brand value in the last 2024 period is 71, effectively exceeding the strategic objectives to the investment in product promotion and innovation. And in the last objective hasn't been achieved because the goal was to reach level 6 in industrial technology, but in the period 2024 level 5 has been achieved because the company periodically is to comply with the general strategy of leadership in health, and to comply with it, it is necessary not to give much investment to the areas of the company, including the area of industrial technology.
Learn lesson. One of the main lessons learned is to always have the strategy to be using defined. In the case, our cost relationship strategy allows to optimize expenses and thus increase net profit. These expenses cause the probability of the company to be greatly affect reducing net profit in 50.6% compared to the 2020 period. Next, please. Improvement points. Investment in the product innovation is important because it had level 1 of 12, but in the 2024 period, a scale of 5.3 was achieved, making to the product more attractive. The increase in the brand turned to be beneficial and risky to a large investment in production and organization capacity, because increased the company's presence globally. Thanks.